Hello there, my friends. Chris Marcus here with you for another episode of Inside the Markets and have another great guest, David Moadel of Looking at the Markets, to discuss the wild volatility in the stock market, cryptos, everything else that's been getting pounded. So before we get started, hit that subscribe button so you can stay tuned and see more from great guests like David. And now, with that said, David, great to have you back on the show today. Fascinating things going on in the market. So, how are you today, and how's everything going?
Mr. Chris Marcus, thank you for inviting me back on, sir. It's always a pleasure to be here. And as Mr. Marcus said, hit that subscribe button if you didn't do it already.
Yeah.
The podcast you're watching and listening to right now is an essential source of information. You don't want to miss one episode, so subscribe. Don't think about it, just do it.
Well, David, that's kind of you to say that. And really, the goal of what we're doing here is just helping people understand the stuff that's going on, especially as it seems like many of the Austrians and those in the sound money community have been talking about bubbles that were one day going to run into trouble. Seems like we may be seeing that, whether this is a false start and it gets dragged on for a couple more years. Curious to get your opinion of seeing the stock market get pounded, real estate still struggling, and what's your take on what's going on, David?
Yeah, the everything bubble continues. It looks like we're climbing that wall of worry, but we're starting to slip a little bit, slipping and sliding. If you look at, for example, let's take the S&P 500. You look at the multi-year chart, whether it's the 5-year chart, 10-year chart, whatever you like. You'll notice a smooth, almost continuous and uninterrupted grind upwards since the so-called recovery in 2009, or at least we can call it the bottoming process. Because, hey, the charts don't lie. Okay, fine. We bottomed out in 2009, and it's been slow and steady upwards until this year, and suddenly cardiac arrest mode. Right. What is going on? Trump's been in the White House for a couple years now, so it's not a change of presidents necessarily that did it. What it could be is maybe is it possible that the punch bowl is being taken away, that the Fed policy is starting to unwind, and that easy money, the era of easy money is over, and it's something that we'll look back on one day perhaps as, wow, that actually happened? Seriously? Zero interest rate policy, negative interest rate policy? Our grandchildren, if this planet is even hospitable enough for our grandchildren to exist here, are going to shake their heads, and they're going to read history books, if they're even reading at that point, and if there are history books at that point, and say, wow, how was this even logically possible? But it happened, and now we're finding out what happens at the end of this cycle, the end of this grand experiment. I don't think it's going to end well. Does that mean that you should go into all cash right now? No, because cash also stinks. I'm also expecting high inflation. So if you get into stocks, at least the S&Ps, the Qs, the NASDAQ, the Dow right now, potential trouble ahead. If you pull all into cash, you've got a deteriorating asset class. You're subject to hyperinflation. First Venezuela, next Zimbabwe, next Argentina, Egypt, and other nations that have hyperinflation. Are we next? I don't know. If you look at the chart, inflation has been going more toward the 3% range than the 2% range lately. It's creeping upwards in a way that people don't notice it. That's how they get you, right? Mm-hmm. When it goes slowly, people don't complain as much. So you've got the deteriorating dollar. You've got a risky stock market. Where do you go? Well, where you go is maybe precious metals if you're not in it already. You consider digital assets, possibly know that it's risky, but I'm looking toward the future as the blockchain. You go into alternative assets. Real estate, topped out and is now starting to look a little bit shaky. So there aren't that many places to go. It's a real shame. So that's why precious metals are really precious. They're called that for a reason right now. At least I'm viewing them that way.
Yeah, and David, a lot of great points you mentioned there, and certainly one that I most certainly agree with is the interest rates, because you pointed out how really the turnaround, the beginning of the rally, March of 2009, which was when that first quantitative easing program was launched. You know, we had QE2, 3, I don't know whether you count Operation Twist in there or how you do the accounting, but not a surprise that finally when the interest rates start going up, you see the malinvestment exposed. Guessing you probably remember Ben Bernanke's incredible op-ed back in, I think it was the end of 2010 when he was getting ready to launch QE2. And he talked about, you know, we're going to give the appearance of wealth, let people feel like they have money to spend. What is never mentioned is that, all right, if you print money and it creates that effect, unprinting the money would create the opposite, which is what we're seeing now, and not an accident that the stock market is slowing down and the real estate market slowing down. Perhaps what is a little bit of a surprise, or maybe not, is that last week the Fed basically hinting that finally they may start slowing down with the interest rate increases. I'm a little surprised it took them as long to change course as it has, but curious your thoughts on that, where it seems like even the Fed is noticing higher interest rates are creating these problems. Now we're reversing course. How do you see that playing out, and where do you think they're going from here?
Yeah, I don't know if the Fed had a sudden realization necessarily. I think that Jerome Powell just wants to save his job.
Maybe they were watching your channel and they finally saw we should change something.
I'd like to think it's that, but more likely, there you go. Much more likely, Jay Powell just wants to save his job because Trump is the "you're fired" guy, and he loves to fire people. And Jerome Powell can only buck the trend for so long. He's going to have to play ball a little bit with the man who hired him in the first place. So he's talking the talk. Will he walk the walk? We'll find out in 2019 whether he'll slow down with the hikes. The fact is, if you bought treasuries, if you bought bonds at any point in the last couple of years, you're not doing well on your investment right now.
Right.
Okay. You bought at the worst possible time. And so, yeah, it is what it is. You're not going to find relief anytime soon. Whether he hikes fast or not as fast, he's still going to have to hike. There's nowhere to go but up. The Fed has painted itself into a corner. Again, we're in the unwinding stage of this grand experiment. So yeah, the situation can either bleed out slowly, or we can just make the cut. We can just perform the surgery that's necessary. I guess we're just going to bleed it out slowly. Okay, so be it. The bigger they are, the harder they fall. And so the longer this bull market goes, when the big reset does happen, it's just going to be more painful. So, but hey, what do politicians do? Do they suck it up and tell people to tighten their belts? Never. They say, hey, you know what? Everything's great, and we'll just we'll keep the status quo. We'll keep it going for as long as we can, so we can get reelected. And that's not just Trump. I'm not trying to pick on anybody. Democrats and Republicans, they're all in on this. They're all party to the grand but failed experiment that's going on right now.
Yeah, and you mentioned a key word that I think of a lot, where the Fed has backed itself into a corner, and I don't think people quite grasp that as much as I think would be worthwhile, because, and perhaps you could dig a little deeper in there, where, from my perspective, why I felt comfortable with gold and silver for so long is that you really have two paths, neither of which are ideal. Yes, Trump's right. If the Fed keeps raising rates, there's going to be real problems with the economy. Yet, on the other hand, to say, all right, stop raising rates is essentially we're printing more money, which drives us the other way. So to me, it seems like there's no easy way out, and one way or another, they're trapped. Is that kind of how you're seeing it as well?
Yeah, they are trapped. You put it very well. They have to hike rates either slow, medium, or fast. How do you want your torture, right? I'd rather have it fast, just get it over with. Pick your poison. But they're going to do it slowly because that's That's what Trump wants, and I don't even blame Trump necessarily. That's what the big banks want, of course.
Right.
And you know what? That's what the markets want. That's what investors want. I hate to say it, but investors don't always know what's best for them.
Right.
It would be better just to rip off the Band-Aid, but they're not going to do it. So, do we fear another recession? Yeah, okay, that's a thing to fear. But, market crashes happen once every decade on average.
Right.
It's been a decade. It's time. On the other hand, markets don't die of old age, do they? Bull markets don't die of old age. I've got a lot of cliches, and they're conflicting. That's the problem.
Right.
So, you
It's
know
like,
what? Yeah, pick your cliche, whatever you like. What am I doing to prepare? I'm lightening up on my major indices type of holdings. Okay. If you have to own stocks now, if you must, at least own things that are relatively safe, things that do well during market downturns. Utilities usually do better, not great, but everything bleeds during a recession, at least in terms of blue chip stocks.
right.
You might want to own, let's say, Philip Morris, things like that. Cigarettes and beer, for obvious reasons, do well when the economy tanks.
Right. Right.
So that, McDonald's, even Walmart, the Dollar Tree, that things like that. Those do okay during economic downturns because they become more popular for
Yeah.
various reasons. So you may want to consider that. And utilities, because people still use electricity. Also, interestingly, oil. If you remember in 2008, everything did poorly except for gold and silver held up okay. Actually, they went down, but very temporarily.
Pummeled in the beginning.
Yeah, then they went right back up, and they shut up fast and hard. But oil, gasoline was $4 a gallon
Right.
in 2008. So oil is it's interesting. Oil and the S&P are sometimes very correlated, but when it comes down to it, I imagine during a recession, oil would not be so heavily correlated necessarily with the S&Ps and NASDAQ and the Dow and all those.
Right.
So commodities really are the key, and have some dry powder, some cash, but don't just roll your money up into a wad in the mat, under your bed. I don't recommend that either, because that is a deteriorating asset, which I feel is going to deteriorate even more as we keep on printing money, as you alluded to. I'd hate to imagine us becoming Venezuela, becoming Zimbabwe or Argentina, something like that. If you look at their economic situation, a nation like Egypt, for example, right now, they have inflation. It's bad. It's not the point of Venezuela necessarily, but it's pretty bad. They could have been all right if it weren't for that. They didn't have to go down that road, but they did. So could we go down that road? America is not immune to stagflation, stagnant growth, and hyperinflation at the same time. We had it in the 1970s, and I don't know how old you are, or how old whoever listening, the age demographic of whoever's listening to this. If you're old enough to remember what the 1970s were like, I was just a kid then, but I could sense the misery. In many ways, the 1970s were worse than 2008 because it was just, at least in 2008, inflation wasn't that bad. Yeah, you didn't have a job, but whatever money you had saved up was at least worth something.
Right.
So 2008, 2009 wasn't even that bad compared to the stagflation that could come if America doesn't clean up its act, which it's not in the process of doing right now. So am I optimistic? I don't want to be a bummer, but somebody's got to sound the red alert. And so, I know you're doing it in your own way, and that's what I'm trying to do as well.
Yeah, and understandably so. Again, you mentioned Argentina in there, and I remember a couple of months ago when they were running into trouble with their currency, I wrote an article about it, and one of the things that I remember was their debt to GDP ratio was about 39%. I was thinking, I'm like, here in the U.S., just even using the publicly stated debt, we're over 100%.
Yep.
Let alone if had Lawrence Kotlikoff on the show last week, who calculates the unfunded liabilities of Social Security and Medicare at over 200 trillion. So yeah, it's certainly it's amazing. Everyone looks at these foreign countries like, oh, there's just these third world nations that. But when you look at the numbers, it's stunning what's happening in the U.S. Which when does that ultimately unfold? Again, we still see people buying treasuries in dollars as a safe haven when the stock market is panicking. Yet, I think one of the things that's nice that you and I have talked about over the past couple months is that at some point when you have the break point, things have been set up so that they will go quickly, which, we talked about gold and silver, and also another one to get into is the cryptos, which have been beaten down thoroughly. A lot of people are are feeling the pain, not too happy about it now. Although I continue to see it as at some point, whenever the world realizes the Ponzi scheme-like nature of this U.S. dollar infrastructure, are we going to have to be using cryptos? It's interesting. I talked with someone from the Dash team that down in Venezuela, where their currency has failed, people are using Dash, and there's that degree to which human nature. All right, there's what governments say and how they try and engineer life, but when you're trying to eat and you need a stable currency, do you still see the cryptos playing that role? And is this a time when people might want to think about buying, or what's your take on what's happened there?
Yeah, that's a great question. It's interesting. Bitcoin went from around $20,000 per Bitcoin down to between the $6,000 and $7,000 level, and then seemed to have stabilized there for several months.
Right.
And a lot of people got complacent, but the markets have a way of teaching us a lesson when we get complacent. And so it took it down another notch there to under the $4,000 level, which I could understand. A lot of people are complaining about the price action. But remember, if you got in 6, 7, 8 years ago, then you wouldn't be complaining. You're still up considerably. So you have to keep in mind the long-term perspective of this. This is the 12th crypto or Bitcoin crash of 30% or greater, the 12th one. So people who've been in this game for a while know that this is not the last. This is not the first crash, and probably won't be the last. And you just got to look at you got to pull back that chart. Don't just look at the 1 year chart. Look at the the 8 year chart. Okay, look at the multi-year chart, and you'll see you'll get more perspective. You'll see the forest and not just the individual trees there. Cryptocurrencies have been a godsend to regions like Argentina and Venezuela. They're not so bearish over there because they see the real world applications, because their fiat money has been so devalued, excuse me, that cryptocurrencies like Dash you mentioned are the buy-in rate, the adoption rate. It's just being embraced, and I think it's a wonderful thing. And as America's fiat money becomes devalued, I think people will start to look to alternative grassroots movements such as the cryptocurrency movement. What is 2019 going to look like? Well, I recently spoke with excuse me, a gentleman named Tone Bays,
Yep.
who is you probably know him. You probably heard of him. I had amazingly an opportunity to speak with him and on my channel looking at the markets, and he actually predicts that it could go down to $1,500 per Bitcoin and then start coming back up toward 20,000 toward all time.
I did hear that Cliff High's latest data also, hope I'm getting this right, but something to the effect of the next 6 months we'll see Bitcoin down to $1,200 or $1,500 and then skyrocket from there. So just one data point.
And that's right. And there's logic to that, because we're not at the point of capitulation yet where everybody says, forget this. And just when the last sellers sell. when the last, when they shake all the weak hands out of the tree. And if you sold your Bitcoin, I don't want to call you weak. That's just a financial term, weak hands. I don't want to insult anybody, but they'll shake all the beginners and all the weak hands out of the tree, and the people who are still standing will be rewarded, I believe. So that's what happens at market bottoms. That's what happened in 2009 when the Dow Jones finally hit that bottom, is when all the people finally reached their pain threshold and they couldn't take anymore. And finally, the last people sold, and the holdouts who stayed in there did get their money back eventually. And the really smart money got in at that point. So if people want to start a position now, it may not be a bad idea. You can start accumulating. You don't throw it all in at once. You start to scale in possibly at a time like this.
Right.
And then when it, layer into it, let's say in 2, 3, 4, 5 smaller investments of your investable assets, realizing that there is risk, realizing that cryptocurrency investments always do carry risk, but then so does every investment.
Right.
But it is more volatile than, say, Coca-Cola stock or McDonald's, something like that. So with that in mind, if you start to scale into your position now, you could do all right. And if it does reach that pain point of 1,500, 1,200, whatever it may be, and then start to turn around and come back up, yeah, your cost basis will be lower because you scaled into it. Now, what if you got in at 13, 15, 18,000, whatever the case may be? Do you hold on to it? Well, you're down so much now. Why not hold on to it? What do you have left to lose? I do coach people, and sometimes they call me for a session when they're down 60, 70, 80%. They say, what do I do? I say, well, at this point, what left? You're holding a lottery ticket now at this point. So what do you have left to lose? Might as well hold on to it, because if you sell now, you're going to get peanuts for it. You're going to get pennies on the dollar. So if you're down a lot, I would say you might as well just, you have to make your own decision. I'm not a licensed or registered investment advisor. You have to consult, somebody who's qualified in that way if you want investment advice. This is not investment advice. But what I would do is I would just hold on to it, because what do you have left to lose at this point? And if you're considering starting a position now or adding to your current position, perhaps scale into it. If it goes down more, scale in a little bit more. Until you're finished scaling in, and then just hodl, but at least you'll be hodling at a pretty good price, I would imagine.
Yeah, and that's one of the things I appreciate you do, David, of helping people phrase how to think about things, because yes, you can look at any investment, there's countless asset classes, yet really just that thought process where, of course, if you had sold at 20,000, you're buying it back for 3,000 now would be great, but really thinking, okay, big part of trading, one of the things when I was going through my training for trading equity options, it's like, we're here now, and as much as you're hanging on to the past where, all right, it's at this price level, what's the best decision to do now? And curious your opinion, this is my general approach I've taken, where certainly we have a lot of markets that are manipulated. Again, I don't like to just say everything's manipulated without due cause, but I do believe, I think the Department of Justice is investigating Tether, who I've heard many folks believe has been doing some price manipulation. So we'll see how that plays out, but with the point being that I've felt the price action of the cryptos has been divorced from the underlying fundamentals, where we saw 3,000, 20,000, now back to 3,000. Well, nothing really that substantially has changed with the concept of blockchain or what Bitcoin is doing. So what I've been thinking is that, all right, the reasons I got here where I see clear problems with the dollar, a system that, maybe I'm early and it goes on for another 10 or 20 years, but at some point, it is a Ponzi scheme. And as long as I see the cryptos continuing to be adopted, continuing to find new uses, like you mentioned, countries where they are experiencing hyperinflation or destruction of the currency, that it's being used there, and then add in that deficits in the US, debt loads are just getting bigger. So while things may be chaotic in the meantime, it seems to me still that the case that whenever this bubble pops, that the science and the technology is something that we're essentially going to be needing to use, and that businesses are adopting it now. And we'll see volatility until then, but when that happens, that's the case I've been looking at. So curious, any comments on any of that thought process and whether that's at least a good starting place for people to be thinking about?
Yeah, there is a disconnect between the fundamentals, as you alluded to, and the price action of cryptocurrencies, again, based on Bitcoin being the mothership, as I call it, the leader among cryptos. So, excuse me, this disconnect, a lot of it is based on just sentiment. Warren Buffett once said that and he was referring to the stock market, but he said the market in the short term is a voting machine, but in the long term is a weighing machine, meaning that fundamentals, the real value of the underlying asset will be reflected in the price eventually, but doesn't mean it's going to happen today, tomorrow, or next week. So right now, you see, 5 years ago, 6, 7, 8 years ago, Bitcoin wasn't in the news so much. And so you didn't see this reactivity to every little development. But now that it's in the headlines, now that it's in the mainstream media, and every time something, some regulatory action happens over in Asia, let's say, you have this ripple effect, and it's generally a negative one. Right. Or a Bitcoin ETF gets rejected, big ripple effect, and people panic. Whereas 5, 6, 7, 8 years ago, they may not have even known or cared. So this is going to happen. So what can you do? Well, again, scale in. Yeah, you could always just scale in. And I learned that idea from Ronnie Moas, who I got to interview on my channel looking at the markets. Mm-hmm. And I asked him, what's your approach? He said, buy some crypto. If it goes down, buy some more. And I mean, hey, be like Buffett, right? Do you think Warren Buffett panics if he buys something and it goes down 20%? Doesn't bother him, and he's done quite well for himself because he's had the patience. And I think it's almost like he's a little bit robotic in some ways. Right. It's like the rise of the machines, and that's why machines outperform humans 90% of the time, because they don't have those triggers, those emotional triggers, fear and greed. Instead, just when something hits the level that they established for themselves beforehand, which is key to success in the investing game over time, they buy low and they sell when it goes high, when it hits that level, when it hits their limit order. So you can apply that to cryptos just as well. Decide, okay, at what price am I going to get in or add to my position? And worry about the fundamentals more than what's going on today or tomorrow. Don't try to trade the news, because then you're chasing. Because if you try to trade the news, then every time something bad happens, you're going to freak out because you're going to perceive it as bad. Right. And whenever the price goes up in the short term, you're going to want to buy. You're going to be tempted. So look at the fundamentals. Is blockchain a technology that's going to be here in 5 years, 10 years? I believe so. Right. Are they going to make more Bitcoins? They're only going to make 21 million of them, and 17 million of them have already been mined. So it's a limited resource, which is good for Bitcoin, bad for the haters. So there will always be haters out there. Okay, you know what? That's fine. There always will be in any new technology, emerging technology. Just like there were doubters when the internet first came out. There were doubters when Amazon and online shopping first became a thing, when smartphones first came out. We're recording this on a phone right now, but the idea you know, it was like those Dick Tracy cartoons, you know, talking into your watch was inconceivable not that long ago. And now we're doing it. So, you know, I believe the fundamentals still are strong if your time horizon is reasonable. If you have the kind of patience, then you can be like Buffett and you can win in the long term.
Yeah, and I like what you point out about how the short term, the market can be like a voting machine, which is why when you take the time to understand something, which again, obviously there are other views on the cryptos than what you or I think, but for whatever a person believes, understanding the fundamentals, seeing the case for why the thing would be used, because then, like you said, you know, if the price goes down, something's worth $4, it's trading at 3 and you buy it, and then it goes to 2 and you buy more. If you feel comfortable with your opinion, that's really how you can make great trades and not get too freaked out by the noise in the short term, which again is something I appreciate that you help your clients go through. And, you know, I find so much of it is that mindset. Yes, the technical information is good, but really having exactly what you just pointed out, like the fortitude and the strength to know, all right, this is, I'm okay with buying at these levels and handling it like that. So perhaps in wrapping up, you could just share where people can find you. I know you do offer that coaching service, which I think is something that people are in need of these days. So you can let them know where they can find you and what you offer.
Yeah, thank you for asking, Chris. My name is David Moadel, and first they can email me, David Moadel, Moadel, @gmail.com if you're interested in that service. Again, I'm not a licensed or registered investment advisor. I cannot tell you what to do or what not to do. But, you know, I do help people, you know, formulate their own trading plans because if you don't have a plan, then you're not going to do well in the long term, most likely. And I'm also available on YouTube. You can find me. Just type in David Moadel, Moadel, and it's called Looking at the Markets. That's my YouTube channel. I've got over 500 videos on everything from cryptocurrencies to stocks, commodities, bonds, the dollar, all that good stuff, as well as indicators. Some people are more into the technical side of things. Cool.
Right.
RSI, Bollinger Bands, stochastics, you're into that stuff, I'm into it too. So come check it out. You're all welcome.
Yeah, it's a great channel. I love watching the videos you have up there. I love how you explain things in a way that, like you said, not telling people what to do, but giving people the ability so that they can form their own opinions, then make sure they have trades that are expressing that opinion in a way they feel comfortable with, rather than what has existed for so long where people often feel, well, there's Goldman Sachs or JP Morgan, I just have to hand my money over and hope for the best. Fortunately, that day is changing, and you offer a great service for folks who are looking for that outlet. So again, great catching up with you as always, and thanks so much for joining us and shedding some light on these markets. I'm looking forward to catching up again soon.
Chris Marcus, thank you, sir. Hope to do it again soon.
All right, my friend. Be well.